This is Spencer with Numbers Up Finance. Today I just wanted to put out a quick market video discussing what happened in the previous day. There was not a whole lot that happened of technical significance, but in yesterday's video I neglected to mention that the FOMC would be releasing their minutes for the upcoming, their outlook for the Fed. Nothing significant happened. Let's actually take a look. So today there wasn't a ton of price action, but it is kind of interesting what happened within the market if you actually read what happened during the day. So we gapped down to start the day. This is just SPY right here that we have here, but we gapped down to start the day. We were down not a whole ton at the beginning, and it was bought right up. But leading up to the Fed meeting, or not the Fed meeting, but the release of their notes or their minutes, we had very sharp selling. This was about almost a percentage from the top to the bottom. It's not a whole ton, but it does indicate to me that there's a fair amount of bearish sentiment right before it. How people were expecting the Fed notes to come out saying that they were going to be planning on raising the hikes or hiking the Fed again, the interest rates, and that did not happen. The Fed actually came out and said that they would. They're not in a big hurry to continue raising the hikes after the past couple that we had in 2018. And then right after that, you can see there was a strong buy up right into the close. And so overall, we did finish the day slightly green. Let me pull up the one-day charts again. We still finished slightly green, but we are very much so still in bear country. We're still in this zone that I had marked out from the previous day. This is the area that I expect the sellers to step in, and nothing has changed even though the Fed has come out with their minutes and said that they don't plan on hiking it. Right now what's interesting actually is that we're right about at the level of when the Fed hiked it in December. I don't remember the exact date. What was it? It was somewhere around here, but we're right around the same price level that we've regained back up to. Which is kind of interesting because that was very much so a catalyst for the big sell-off that we got, and we've rallied up since then. Let me bring up the charts for QQQ. Again, much the same. We're still within that same zone that I had laid out. We have not yet crossed above the upper resistance level that I had laid out. There's still a lot of overhead resistance that we would have to go through for us to get out of bearish territory. And again, I mentioned yesterday, we still have yet to have this big sell signal that we have. We still have not had a day with capitulation, no amount of tremendous selling or bearish engulfing flag or anything really that should, at least for me, that indicates that I should be going short. It is favorable in my opinion to go short here just based off of the risk-reward ratio. I don't think we have much room left to go upwards, and certainly not a significant thrust up that would be, like what we've seen over the past couple of weeks where it's, did 10-12% over the course of a couple of days. We certainly don't have that left to go up, if we do have anything at all left to go up at all. What we might see, however, is we've had a very whippy market for the past couple months. Let me bring back up the SPY chart once again. There we go. Well, we've had a very whippy market where it's either incredibly down or incredibly up, and one day it can be up 3%, and the next day it'll be down 5%. And we have these large swings that are very, very strong in magnitude. And maybe we get a brief stalling there. We have a little bit of consolidation where we just kind of bounce back and forth. That certainly is another possibility. There's three ways that the market can go. It can either go significantly up, it can go sideways, or it can go down. Just to state the obvious. But again, I'm still leaning towards it being bearish. I must say my probability of a bearish pullback here is a little bit less than what it was before the FOMC released their minutes. But I'd still say overwhelmingly the risk-reward ratio is still in favor of the bears. Okay, now we've got the futures chart for the Nasdaq 100 index. This is the 90-day 1-hour chart. The two things that I wanted to point out, first of all, yesterday I mentioned that we have bearish divergences. We still have those. The thing about divergences is that they can just be extended and extended. So they're not exactly buy or sell signals on their own, but they do a pretty good job of indicating when a reversal is going to be coming. And you can see the momentum's going down, with the prices are making higher highs. It is the hourly chart, so it's very micro term analysis. It might be burned through. We might this MACD might push up more and then foil that divergence. It is definitely a possibility. But the other thing that I want to point out on this chart that I think is pretty significant, we're at a decent level of support resistance. You can see what is this, the 66.50, right around that price level for NQ. We have a couple of tags right at this level. Right now we've bounced off of it twice now. We have 2 tags here that act as a resistance. And going back, you can see there's quite a few times where it tags right off of it. There's consolidation right there. And then even back here we have a low. It's not tremendously strong support resistance. I was actually looking for this level back here to be a resistance level, and we burn right through that one with only one reaction. But it certainly is a possibility that we get a spike down off of this, or alternatively we could spike right above it. We could push through with a nice bullish push. I'm open to all options. Then the last thing that I'll leave you guys with is the VIX volatility index. So just taking a look at the daily chart here, we're approaching a nice support zone that we have. We're not at it yet, but we are quite extended downwards. You can see we've had quite a few red days in a row. So we're both overextended in terms of the nominal price that we're at for VIX, and also we're overextended in time, where it's just a probability thing. Once we have a certain amount of days that are in one direction, you'd expect at least 1 or 2 days to be in the opposite direction, if not significantly more. And generally when the VIX is going up, that means that the stock market is going down. And so right now it's falling. It's becoming very close to a near-term support zone. Let me pull up a better chart to show you this. But you can see right here there's these 2 price levels where we have quite a few tags, most pretty recent tags actually off of these levels. And we're not there yet. We are not there yet. So maybe we have another couple of days where we get down to this zone before we get that but another spike up that ends up bringing the market down. So I'll just leave you guys with that. Make sure to leave a like, comment, and subscribe to this video if you liked it. Make sure you keep your numbers up, and I wish you all the best of luck with your trading.